fears of a regulatory crackdown sending Reddit stocks down big today. Last night, GameStop disclosing that the SEC is looking into the recent volatility in its shares. That after SEC Chair Gary Gensler announced plans to review the current market structure, specifically payment for order flow. And on Monday, the SEC announced it is looking into any disruptions of the market, manipulative trading, or other misconduct when it comes to some recent high-flying names. So, as the SEC turns up the heat, what exactly will they be looking for? Let's bring in Lisa Braganza, former SEC branch chief. Lisa, great to have you with us. Thanks for joining us.
Thank you so much. It's great to be here.
I think that there's a big question amongst some of these, retail traders who are in these high-flying stocks as to what is going on in the markets and whether or not their concern is real or not. It is pervasive. So let's go through the numbers here. These are Gary Gensler's numbers. 53% of total trading happens on public exchanges, which means that 47% does not. 9% happens in the dark pools. Does the SEC know what actually happens in these dark pools?
The SEC has the ability to be able to look into that. The problem is that, for this large portion of trading that isn't occurring on the public markets, it's gumming up the works. The way that the markets were set up was with an expectation, and the regulations are set up, was with an expectation that there would be public trading and that the prices that stocks were trading at would be available on those public platforms, exchanges. Well, that's not the case for about half the trading that's going on out there. And the great thing about Chairman Gensler, I really want a Chairman Gensler bobblehead because he's just the best. I mean, he is looking at this, at the reality of what trading is today and saying the law is out of step. And, that's the sign of somebody who's not a lawyer. And it's just terrific to see.
We have the ability to look into what is going on, and we should also add as a corollary that 38% of trading happens in off-exchange trading platforms, and so away from the public exchanges as well. Could you say definitively that things like naked shorting does not go on, given that the SEC hasn't really looked into the trading activity to date in these dark pools and the off-exchange trading, which is subject to a whole different set of rules? I mean, do we know? Because the perception of this new generation of investor is that the market's rigged and that there are institutions and bigger investors who are committing effectively financial treason off exchange.
And that is the huge issue that I think the current chairman is addressing, that the trading in meme stocks, the fact that that we have Reddit traders, people who are very active and who want to be investing, young people who are learning a lot and are passionate about this, but who lack confidence in the regulatory structure and in the system. That is something that, you need confidence in capital markets in order to have a healthy system for raising money for business. So this situation is something that I think he wants to address. My hope is that he's not just looking to, or the enforcement division is not just looking to come down on the Reddit traders. I mean, obviously, if there's insider trading that was going on, if there's, market manipulation that's illegal, then, they will find that. I think it's a shame that GameStop's stock took a hit when it disclosed this subpoena, because this happens all the time. The SEC can be doing an insider trading investigation, and it will issue a subpoena to the company that whose stock was traded, and the company didn't do anything wrong. So there really isn't any reason for the markets to be reacting so negatively, and for investors to be running from GameStop.
Right.
This is not a GameStop problem; it's a trading problem. With respect to the naked shorting, I don't think the problem really is naked shorting. Shorting is a good thing. I mean, we have this balance that goes on. We have people who buy a stock and, they want good things to happen. So they want the price to go up. But sometimes the price is too high So how do we bring it back down? Shorting is one of the few ways that we can get that price back to reality when it's too high.
Sure, and I don't think anybody's disputing the role of shorting in this market. It's whether or not naked shorting, which is illegal, has been illegal since the financial crisis, actually exists, and whether we know it exists or doesn't exist when so much is traded off exchange and there's less transparency to the market. But I want to get back to something that you said that I thought was interesting, and that is the SEC looking into these Reddit traders. Why would the SEC go after, in large part, what seems to be retail traders? I mean, if you took a look at what the CEO of AMC sent out yesterday in terms of 4.1 million individual investors that own an average of 120 shares of AMC, this group of people, this cohort, doesn't seem like they would have their wherewithal to manipulate the markets, unless you see something that isn't obvious to me, at least.
Well, I think what the SEC would be looking into is whether there is some kind of coordinated effort to drive up the price. What's interesting here is that what you tend to see in a market manipulation is a pump and dump. And, people take their profits. That's not the case here. So that's the main reason that I think the SEC should not be focusing on the traders, because they're not. Some of them, of course, are getting out and taking some profits, but the vast majority are not, and that is not what
Right.
the overall group was advocating and was doing. So I think the real issue here is, do we have systemic problems, not retail trading problems, not
Right.
manipulation, and some of it is going on undisclosed.
Yep.
The SEC has the right to go in and look at what Citadel is doing and look at what these other big market participants are doing, but how much are they doing it? That's something we just don't know.
Right. Lisa, thank you so much for your insights. We do appreciate it.
Thank
Lisa
you.
Berganza, former SEC branch head. I think that is the interesting question. That is, are there systemic issues involved here that the SEC needs to look at least, because there is a lot that we don't know. And for all the people who are ready to say that naked shorts don't happen, that's definitely, one opinion. There's another group of people who believe that it does happen, and there's so much off exchange. Do we know?
Right.
That's the issue.
And it's nothing that we're going to say that's going to change their opinions, and that's fine. And I'm sure it does happen to a certain extent. I've been of the belief that these derivative products that are creating synthetic shorts that are highly levered are part of the problem. I'll also say this. Don't think for a second, and I've mentioned this, I'll say it again, that hedge funds haven't hired people to infiltrate and watch and in some capacity participate in some of these rooms. Without question, you want to investigate something, go find those guys and gals, because I think they might be at the root of this problem as well.
Pete, what's your perspective from the options market point of view?
Yeah, I'll tell you what, the volumes are absolutely extraordinary, Mel, and we've talked about that before when we were addressing AMC not too terribly long ago and going back to GameStop back in January, and the volumes continue to be there. And the derivatives markets, they're a great tool, but they also, there are obviously some of the characteristics of it all that cause it to seem like it's a different way of trading, which it is. And if you know what you're doing, then I think that's very comfortable. For me, my biggest discomfort is that I don't know that a lot of the people that are actually trading in the derivatives markets right now completely understand what their risks are. And I don't know how we can fix that, but they've got to get a better understanding of what's really going on and how much risk do they really have on. And I think that's part of the problem, because she mentioned investments. These are not investments. These are trades. These are traders. There is absolutely no doubt in my mind about that. Even the 100 share folks or the option folks, they are trading this. And so they're not looking at this as some sort of they're not seeing the fundamental story. They're not seeing a lot of the other aspects of it. What they're looking at is the opportunity for that squeeze of those shorts. And I'm not saying there's anything wrong with that, but they've got to understand much more about what they're doing and what their risks are. And that's my biggest concern right now as I watch this continually move to different stocks each and every day.
Shepard Smith here. Thanks for watching CNBC on YouTube.